Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentation series. Today, we want to interview and present to you Chesapeake Gold, and Alan Pangbourne, the CEO, is here with us. Hey, good morning to Canada. How are you?
Good morning, Jochen. How are you?
Yeah, good. Thanks. All fine. And great to have you here. We did an update interview some days ago, but now we want to do, let's say, a more overall look onto your company, because we want to give also some new shareholders, or probably new shareholders, the idea of your company. And let me set up your presentation here, and let's dive into it.
Okay, so let's go through Chesapeake, what we are, where we're going, what we're going to do. So start off with, as always, cautionary notes. I will be making forward-looking statements. Please be aware of that. To start off, I guess the first thing is Matatus, our principal project, has been around for a long time. A lot of people have known about it, and they've written it off. We took over management of the company at the beginning of 2021, so a bit over a year ago now. And we've got a totally different concept, a brand new project, a brand new idea that we believe, and the PEA that we released in August shows it, that we've got a economic, financeable, deliverable starter project that is then expandable to take advantage of the massive resource that we have. So if you compare it to the old study back in 2013 and 16, was a huge capital undertaking. It was $3.5 billion of capital. We're at $360 million of capital. They had a 27-year mine life. Because we're starting smaller, we still have a 30-year mine life, and that's only on 20% of the ore body, because it only uses the intrusives and the intrusive breccia. They had an NPV back then in US dollars of 1.8. We've got 1.9 in Canadian dollars. So a little bit less, but a significantly lower, smaller project. So don't forget about the old project, because as the gold price has been moving up, and as the larger companies start looking to replenish and replace reserves and resources, they could come and have a look at that. They can finance the project that size. We never could. So we've got a new route.
Alan, one question. As it looks to me a little bit like that you scaled back from a PFS status to a PEA status. What is the reason for that, or why have you done that?
There was only one reason that the PEA was a PEA in 2021, and it was to do with all the regulators in Canada. And we don't have yet, it's part of the work plan this year, we don't have sufficient metallurgical test work data to support the assumptions in the PEA. Hence, it's only resource. There are no reserves stated, because I cannot prove that they're economic, because I don't have all the metallurgical test work yet that I need to prove that. And that's the key thing we're working on this year. Yeah.
Okay, and is also the reason, maybe, sorry to interrupt you one more time, the reason because that was in the old PFS, it was flotation, POX autoclave, and you go to sulfide heap leach?
Yes, that's the big difference. That's the huge difference between the two projects. Allows us to do a much smaller starter project, 15,000 instead of up to 90,000. Still makes a decent production. 150,000 gold silver equivalent is not small in Mexico. So it's still a decent starter project that you can then build on, expand it, duplicate it, and so on, to take advantage of the resource.
Okay, super.
Yeah.
So, thank you.
So overall, we started off with this theory that there was this higher grade core. The overall deposit is 1.3 billion tons, over 20 million ounces of gold, 550 million ounces of silver. That's 28 million ounces of gold silver equivalent. We focused on, as I mentioned earlier, the intrusive breccia and the intrusive, which is a higher grade core. And I'll talk about some results we've had from some successful drilling. 167 million tons at about a gram a ton. That's based on the old resource statement, and a project much lower capital costs, operating costs, and a heap leach that gives us a much better economic return. So that's the underlying deposit. That's the resource statement. You can find this on our website. I've mentioned most of the numbers there. The important thing, the PEA only focuses on about 20% of the mineral endowment.
How much do you have to do to upgrade then to a reserve, for example?
Next, that's coming.
Okay.
Where do we fit in the world? We're in the top 5 largest gold, silver resources in the world that have not been developed. And that is key. It is an absolutely huge, huge gold, silver deposit sitting in Mexico. I don't have to find it. I don't have to discover it. I don't have to drill it out. It's there. Yeah. One of the things we did do early in last year was drill 5 holes. We drilled them predominantly to get fresh material to do the metallurgical test work, which is key to supporting the PEA assumptions. Nicely, we found that they were about 20% on average higher than the grade that we thought was in the high grade core. So your 1 gram goes to 1.2 equivalent or something like that. And on top of that, 2 of the holes were the best that have ever been drilled on the site. So a great result. That triggered us to go back and think maybe we should drill some more holes. So we announced that we were. We have been drilling 16 new holes. The first 5 we put out in a presentation recently. They continue to support it. Again, they were 2 of the best holes ever. They were better than some of the ones in the first round. And on average, the next 5 holes gave us a 10% increase in grade. We're still drilling. We've got another 11 holes to go. When we get the results of those, we'll put those out. That entire group of holes, the 21 holes, we will redo the block model to get an updated resource statement, which will feed into the PFS. Yeah. The PEA, key things out of the PEA. Firstly, it's a much more compact layout. Everything's on site. I'm not spread out over 100 kilometers. I don't have a secondary site down in the flats and a tailings dam and all this sort of stuff. So all of it, everything's on site, as you can see in this layout. We've identified the entire area to fit all of the intrusive and intrusive breccia in. So that's the pinky colored area where all the heap leaching will go. This pad here is the oxidation pad. That's sized for 180 days of oxidation. And then the green here is the crushing plant getting the material and then some other infrastructure around. The mine, sedimentary material that was mined during getting this, which we're working on the metallurgy with that as well. And then 2 waste drums. Yeah. So that's the overall aim.
And this is what you all would get for like $360 million.
That's $360 million.
Great. How much contingency is in that capex?
15%, I think it is.
Okay, that's fine.
It's on another slide as we get there. Sorry.
Yeah. Okay.
So the flow sheet, pretty simple. It's almost identical to the copper industry, except we're going to get gold and silver. So crushing plant, 3-stage crush. Everybody knows how to build a crushing plant. We all know how to crush rocks to 1/2 inch. A mixing drum to ensure that we mix in the reagents that we need to get it to oxidize properly. Obviously, the source of the alkali. We put it on that oxidation heap, circulate the solution, let it cook for up to 180 days. Once it's cooked, pick it up, put it on the permanent heap, and that we just keep building up and up and up and up and up and up, which is that pink area in the pad. That is a standard lime cyanide gold heap leach. Everybody knows how to do it. This one, the oxidation heap, is a direct copy of exactly what they do in the copper business physically. So plastic liner, air injection underneath, all sized the same as the copper industry does, because we're effectively doing the same thing. We're oxidizing pyrite to release the gold and silver in our case. In the copper industry's case, they oxidize pyrite and chalcocite to release the copper.
And you have built so many mines in your life. I mean, that's for you, it's absolutely no rocket science.
This is tiny.
Yeah.
The Spence project was 60,000 tons a day through the crushing plant,
Whoa.
250,000 ton a day mine. Back then in 2002, it was $1 billion. Today, it would probably be about 4. So the same size as the big project they were planning to build. Yeah, and I've built enough big projects. And then gold silver recovery is the standard Merrill-Crowe plant again, which is done everywhere and everywhere. So everything in there is known. It's just how you put the jigsaw together. The other thing that's really interesting, and I should probably focus a bit more on this sometimes, it's green. Whoops, why did we go forward? Go back again. It's green.
But
and the
your slide is not showing up here.
It's showing up for me.
Oh, that's interesting. Okay, then please keep on talking. Hope that works.
We say it's green gold, and we say that for 3 very, very simple reasons. Compared to the pressure oxidation, which is the commercially typical used process to get refractory gold, we use 95% less energy per ton, or 78% less power per ounce than the traditional process. And that's compared to Barrick, to the autoclave project at Pueblo Viejo, or Veladero, which is a heap leach project. So I'm comparing their own data with the different processes. When you get to water, 98% less water or 91% less water per ounce. That is huge. From a power point of view, CO2 emissions, from a water consumption point of view, and then finally, there's no tailings dam. And the water and tailings dam are particularly important with the local communities. Everybody's scared that we're going to use all their water, and nobody wants to live near a tailings dam. So that is really important. I probably don't play it up enough, but it is probably the greenest way you can get gold out of sulfides. It's not probably, it is the greenest way you can do it. Yeah. Capital cost summary. I won't go through the details except to highlight the fact that it's 90% less capital when you compare it to the 2016. It's a smaller but expandable 15,000 ton project, ton a day. Compact site, power lines nearby, water is nearby. We know where the water will come from. We're just checking the process out on how we transfer water rights up the mountain. As you asked about contingency, there's the contingency there. There's about $63 million. So that's actually closer to 20% of your total construction costs.
Fantastic.
Which for a PEA is reasonable. So that's the capital cost, $360 million. We believe that's financeable by a company our size. Operating costs, when you take the byproduct credit from the silver, total cash costs of just under $700, all in sustaining about $750 an ounce. So again, decent price, decent costs, given the current metal prices, great margins.
I mean, even if you would come out at 800 or 850s due to inflation, that would be outstanding, right?
Yes. Yeah. Yeah. This gives you an idea of the profile. As I said, about 150,000 gold, silver ounces for the first 15 years. So that's that lot there. And then there's the possibility of doing a second phase expansion, probably in one of these dips. So year 5 or year 9, depending on when you want to do it. And then further expansions, obviously, to pull some of this production back and start looking at the sedimentary material and other materials that are on site to take advantage. That just shows the grade profile. So the financial summary, $360 million capital, sustaining another 176 over the life of the mine, 15,000 tons, 1 gram a ton gold equivalent. Before we upgrade the resource based on the additional drilling. 2 assumptions around recovery, 70 and 75%. Metallurgical test work ongoing to support those. Gives me 31 years, 150,000 gold, silver equivalent, decent strip ratio, cash costs of just under 700, all in sustaining of 750. at 1,622 silver, so quite a way away from where the gold price is today. 1.4 billion, 35% IRR. If you use 2026, which is close to where the recent spot is, 2.2 billion Canadian and a 50% rate of return. So good, solid starter project. Yeah. Just some flexibilities on the prices, so you can pick your own pair of metal prices you want to use. Go for your life. Yeah. Next steps. So opportunities, expandable starter project. It's conservative. It's only the starter project. We haven't layered in expansions and things yet. Potential for the increased higher grade, which I mentioned earlier with the drilling. There's some things we can do with the pad layout around pumping and stuff, but that's detailed engineering that I'll get into when we do the PFS. So the next steps going forward, column test work, probably a little bit later than H2 because I'm still working on those. Restart the environmental monitoring, which we're working on at the moment. So as I've got continuous environmental data to support the PFS and the environmental impact statement. The infill drilling that I've mentioned, we should have all of that finished by the end of this month and results out in April, depending on what the lag in the labs are like.
Will you also do infill drilling this year?
That's the 16 holes. We don't think we need any more drilling after that.
Okay.
Yeah, we believe we've got enough drilling. And when we did those 16 holes plus the original 5, we did them deliberately to be infill met holes in between the other holes that have already been drilled. Yeah. So we didn't just put them next to another hole. We actually starred it so that it was in between. So it closes up and gives me better definition. So met test work. This photo is really to give people an idea that it's working. So this is the intrusive when we put it in the column. The first column we ran back in May of last year. We started it. June, July, August, as you can see, a very nice color change. That reddy brown color is iron. It's the iron oxidizing from sulfides to oxides. We crushed that. That's 1/2 inch in those columns. We deliberately bought transparent columns so as you can see what's going on inside, which was a great decision. As I think I mentioned the other day, we've now got 16 columns running with various conditions, and that's part of the ongoing program to get the metallurgical support results. Just a quick comparison between the copper process and the gold and silver process. It is identical all the way down. The difference is what minerals we're actually oxidizing, but in both cases, it's pyrite. Yeah. What we do in the gold side of it is we run it alkali instead of acidic, and we leach the gold after we've oxidized the pyrite. That's the only things that are different. We crush it to the same size. We put it through an agglomerator or a mixing drum. We put it on a single on-off pad to oxidize it. Both cases, they're oxidizing it. We make sure we keep the solution separate. Force air in to keep the oxygen levels up. Oxidizing chalcocite, covellite, and pyrite in the copper system, which are 2 secondary copper minerals, to get 80% oxidation and 80% copper recovery. That's been done for over 30 years now. Exactly the same, except, as I mentioned, alkali, and we leach the gold and silver after we've oxidized it. So I can't do it concurrently. Yep. We're cheap.
That's for sure.
Right? So ounces per common share at the moment, peer group runs at about 0.08 ounces. You get 1/2 ounce of gold silver equivalent with us. So significantly more ounces. On an enterprise value, we trade at about $6-7 an ounce. Everybody else is trading higher than us. Average is about 54 ounces. dollars per ounce. Even if you take out some of the big guys at Cisco Mining and Nova Gold, which is Donlin Creek, you know, you can see there's significant room for movement in our share price.
When do you think you can bring up, let's say, a PFS? Because I could imagine that would also has as a consequence a significant re-rating.
Once I've got the metallurgical test work, I'll release that, and then I'll be working on the PFS, and I hope to get that out by the end of the year. That's the work plan for this. That's the final piece of the work plan for this year. So this year is update the resource to feed into the PFS with all the 21 holes that we've drilled, and all the metallurgical, or not all, but a significant amount of the metallurgical test work to support the assumptions in the PEA. As I said, the reason it was a PEA was because I didn't have enough metallurgical test work. Everything else in that PEA could have been a PFS. So once I get the metallurgy and the updated resource model, I can redo the PFS. And that's the plan.
Okay, that's so by the end of the year, the PFS could work.
Yeah.
Wow, that's fantastic. Okay.
And the key one is the MET test work. That is the biggest single thing we got to get done this year, because that gives me, rather than just a pretty picture, I'll be able to put up a pretty picture and some graphs that show if I oxidize nothing, I get this. If I oxidize a little bit, I get that. If I oxidize more, I get this. If I oxidize this much, I get what I put in the PEA. That's the key statement I need to be able to show. Yep. So in summary, massive deposit, one of the largest in the world. The high-grade core has been identified, and we're confirming that with the additional infill drilling. The technology dramatically drops the capital costs, greatly reduces the environmental footprint, and we're green gold. It is the most environmentally friendly way to do this. The PEA demonstrated that it's a financeable, deliverable, expandable project. Phase 1 is a solid project. Significant shareholding by the management team. I own 11% of the shares.
Wow.
Tej, who's our BD guy, owns another couple of percent of the shares. On top of that, Eric Sprott and Sun Valley. Eric Sprott's our largest shareholder at about 8.5 million shares. If you put the four of us together, you've got 40% of the company. Yeah.
Super.
So we're in a good jurisdiction in Mexico. Durango is a well-known state for doing mining projects. I've been down to Mexico, met with the governor, met with his minister of economy and all of the various bodies. I knew a bunch of them from when I used to work in Mexico before. We got $30 million in the bank and change, so we're fully funded. We've got enough to get us through to the end of the feasibility study, so beyond the PFS. And we trade at a ridiculous EV per ounce at the moment. So that's really our story.
Fantastic. Super. Thank you very much, Alan. I would say a really compelling story. That's also the reason why I'm a shareholder of the company. Given the fact that by the end of the year, the PFS, could you already do the next year, let's say, like a production decision? Or let's say also like, because you are a mine builder. Yeah. Do you want to bring this by yourself in production? Or could you also imagine to say, hey, you know what, for the right price, maybe I give it away, or I joint venture with a bigger company?
If a bigger company came to us and they wanted to do the bigger project, the original PFS, but we can't do that. We cannot raise $3.5 billion to fund that project. Or if we did, my shareholding would be 0.1% or something ridiculous, right? No, because you get diluted to hell and God. So I don't want to do that unless they make a really good offer. Now, could they? You never know who's looking at you until they walk through the front door. Yeah, we've talked a bit about my past. I didn't know that somebody was going to have a go at Guyana Yeah, and we went from 60 cents to $1.85 when we eventually sold it. So you don't know. So in the meantime, I've got a project that I believe the technology works. I believe we can build it. I believe we can finance it. I believe we can deliver it and then expand it. So there's two ways we can get this thing into production. One I can do as Chesapeake by ourselves. The other one I can't. So all of my focus and efforts are based on what's in the PEA and moving that forward. Now, you asked about making a construction decision. A PFS is called a PFS because it is a preliminary feasibility study or pre-feasibility study. Given that we want to build it ourselves, we will need to raise money, mixture of debt and equity to be able to finance it. The banks will need a feasibility study. It will need to be World Bank compliant and Equator principles and all of those things. So we really don't have a choice. We will have to do a feasibility study. And to be honest, I want to have done all of my variability test work so that I can actually build what they call a geometallurgical model. So I understand the geology and the recovery to get the economics, not just the geology and assume a flat recovery. That's very dangerous. A lot of the bigger mining companies in the copper business as well do that. We build geomet models. We don't build just geologic models. And for a heap leach, that's probably a very wise idea. And so that's what we plan to do. No, because I don't want a surprise day one.
Absolutely. Yeah, correct. Super. Perfect. Alan, thank you very much for the presentation and answering all my questions. As I said, a great project, great company, and you have strong shareholders. And what I like is the fact that you have also the 40% under control, because then it's not so easy to take you over. That is quite good. And I would say, please keep on going to make the bride look as good as possible.
Well, you know, with owning 40%, we can't necessarily force a deal through, but we can certainly stop one.
Exactly. That's what I meant. Super.
Right.
Hey, thank you very much. All the best, Alan. And yeah, keep it going. And we look forward to some news then from your met testing and all the other good things you are doing here now behind the scenes. Super.
Have a great day.
Thank you very much.
Jonathan.
Yeah, you too. All the best. Yeah, ladies and gentlemen, that was Alan Pangbourne, the CEO of Chesapeake Gold, and you heard it. It's a monster project, really fantastic. Over 28 million ounces silver equivalent. Gold equivalent. This is really outstanding, and it's also in Mexico. I mean, one of the best mining jurisdictions in the world, definitely. And I think they are doing the right thing, as they have done the PEA on a smaller project scale, much lower capital, and this is makeable. And Alan is a great mine builder. He has built so many mines in his life, and also much larger mines. So I have a very good feeling that this is really starting to fly when they start to bring out all the test results and the PFS, of course. So make sure you have a look on the company, check it out. Thanks for watching us, and bye-bye from Switzerland.